Hi, welcome to the Market Alert for Wednesday, the 18th of March 2015. And starting off with the 5-minute chart, you can see yesterday that the trading range for the Dow wasn't too wide at all. From the low to the high, we're looking around 108 points. So not a big day of activity for the Dow, certainly not compared to the previous day, which we'll see in just a moment. There you can see the pre-market session, the market coming down after the 200-point rise the day before, and then the market finding support there down at 17,800, which it does nicely late afternoon. You can see there we've got the triple X signal there, the market driving through the 20-point scalp, and then we see the up thrust coming into the market there, where we see prices stopping. They trade back down towards the 17,850. So a good move to the upside there, using the psychological level as the target price as a bare minimum. You've got that resistance to the left there as well as 40 points, but then the market going on to make a few more points there as well, had you have used the trailing stop approach. So then we had the sell signal there, and again, like I keep saying, that the market took this out before the market actually moved down to the scalp, which is why we've got to consider moving the stop further back on some of these trades. You can see there is where the stop really needed to be, because again, the high of this bar was taken out. So there's a really strange volatility thing and pattern happening around the turning points in this market at the moment. So there we see the market moving down. We then get another buy signal, and this brings us around towards break even there, and then the market's off up to the resistance to the left again, which is a 20-point scalp, and then we've got this other signal before the close, which of course is too late on the session. That's 8. Start again 7:45, because we've lost that hour at the moment. So again, 20 points there. So we're all in all a very good day. Let's hope that that continues. Let's have a look at the daily chart. So you can see yesterday market trading inside the range of the previous day, known as an inside bar, indecision in the market. And the reason for this, we just have a look at the news, is this reason here. FOMC statement at 6 p.m. this evening. Now, normally we know it's going to happen. We don't really pay much attention, but there is a rumor that the US are intending to increase interest rates. When that is, and if it is going to happen at all, I do not know. But it seems to be a major part of all of the analysis at the moment. And of course, the Fed have been using the word patience in their statement for the last few months. And this has become the focus now, that if the word is no longer in there, then it's going to give a tip-off that Yellen could consider increasing interest rates. Whatever the case may be, today is crucial, and it comes with a warning. I have no idea which direction the market's going to go in. I have no idea if the market's going to move beforehand either. When you consider that yesterday the market only had a range of 100 points, very quiet day, then it could be even quieter as the market waits for Yellen to speak at 6 p.m. So just to let you know that it could be messy beforehand. You could get small moves with a few false signals as well. So personally, I shall just stand aside and wait and see what happens. I may even write today off for that reason, because until she's made a statement, it's very unlikely the market's going to actually have any direction. Of course, now I've said all of that, it'll just go in one direction, but I'd rather give you a sort of a pre-warning that it could be very quiet for the first part of the session, or until 6 p.m. when Yellen actually speaks. And finally, in the implied volatility, 1365 yesterday, 1396, up slightly as the market pulled back yesterday, then found support at the 17,800 before reversing and moving back to the upside. So you can see that reflected in the chart. Good news though, the historic volatility is now below the we've got the implied volatility there. So it's on the right side of it, as it were, for a move back to the downside once these levels actually drop once more. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Let's see what Yellen has to say for herself and how the market reacts to this. And as ever, thanks for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.